morning. You're watching Indian Open right here on BloombergQuint Live, India's first digital live streaming business news service. I'm Neeraj Shah. And on a day which appears to show some bit of green, it's probably not a bad start from somebody who's getting walloped every single day.
Yeah, I mean, but yesterday's session also, remember, we did have a good first half. The second half is where the problem started. But looking at the US markets, the excitement in Asia actually is completely dull compared to the close in the US equity markets after there were some comments with regards to a stimulus from the White House. US equity markets, this is how it shut shop, so 6% pace across the board. But I just want to quickly look at what's happening at the current point in time in terms of what the futures are indicating for today's session. And you've already got a downtick coming in for the Dow futures as well as the S&P 500 futures, which are now trading in the negative. Asia is a pocket more sober. You've got about a 0.5% for China. Hong Kong is flat, but Japan is doing well. Japan's up about 1.7%. For the SGX Nifty, we are under 9,000 there too, but flat, about 8.5% given up.
Yeah, it's just nerving. Almost, there's a chart that we took in the trade setup today, which spoke about how, and just depicted how every rally gets sold into. I mean, we looking at the world market and look at this, the brief rallies, and the chart. If you can just make out the perforations in the chart, you will see what I'm talking about. At every bounce that the global markets have attempted in the last 25 percentage point downtake has been vehemently sold into, like just completely. And I think yesterday's point that Devina was trying to make is also a part of that. I'm just trying to think what could happen to trade today. Yesterday, the Dow futures were up 800 points in the green and came off. But there's still 300 points in the green. Today, we already have the Dow futures down about 2 percentage points. So while we may have a start which is flat, don't quite know if that will last or no. And the problems seem to be real out there. I mean, the yields, the real yields are perking up, which is showing how there's a credit crunch in the US markets as well. We're not seeing the feelings right now out here in India. But, well, God save us if that were to start all over again.
Well, then probably RBI will have to come and take some action. But aside from that, yesterday we had a conversation with Michael Every and pertinent points being made into how comparisons have been made to 2008. 2008 was a very pointed problem. There was a financial collapse, and there were very pointed measures that could be taken to resolve that issue. But this is an unknown. You don't know how long this is going to last, and this is going to stop people from going out and spending. How are you going to, counter for that? By reducing rates, how will you counteract the demand squeeze that's happening, the supply crunch that's there? Brandt of EPFR. Informa Financial Intelligence is joining us right now from Boston. Thanks very much, Cameron, for taking out the time and speaking with us. Give us your sense of the current situation on ground.
We're still in the stage where people are slowly and slightly reluctantly starting to take the epidemic seriously. So we're still on the front side of increasingly tight measures being put in place, people revising their earlier forecasts of just how much economic damage this might do to us. So there's an enormous amount of uncertainty, both financially and in day-to-day life, and that's obviously been reflected in asset markets and in the fund flows that we track.
Coming to fund flows then, Cameron, at this point in time, do you anticipate further big-ticket outflows?
Well, what we've seen so far is mostly the liquidation of easy fund groups where you're not going to lock in a large loss. So the redemptions from equity funds, though there have certainly been some, have not been as startling as the ones we've seen in the past couple of weeks from bond funds. And in the fixed income universe, we've seen a marked de-risking by mutual fund investors, a lot of selling out of high yield and emerging markets bond funds and sending that money on to money market funds.
Okay. From an asset allocation standpoint, Cameron, at this point in time with the uncertainty that's prevalent in the system, Do you feel that, the safer haven investments will continue to be the bonds?
It's a good question, and what I've been seeing that is interesting is that there's more search for entry points on the equity side than on the bond side. I have been seeing positive interest in fund groups dedicated to markets that people feel are going to deal with this epidemic better than a lot of others. Societies with a reputation for pulling together and for accepting firm official action. So we've been seeing flows, for instance, steady flows into Singapore equity funds, Norway equity funds. Latin America, I think perhaps because of its recent experience dealing with the Zika virus, seems to have responded more promptly than many other markets. And we have seen fairly constant flows, especially into Brazil equity funds.
Cameron, thanks so much, of course, for staying up so late for us. Just a couple of questions. One is, when I look at the relative performance of the Chinese markets compared to Asia in the last 2 weeks, it's been much better. How have you analyzed flows into and out of the Chinese markets in the last fortnight?
Well, China is obviously somewhat ahead of us in terms of applying measures to contain the epidemic, and certainly the news flow recently has been that the rate of infection has leveled off and that there's sort of a cautious return to work going on. So that makes China quite attractive to foreign investors relative to many of the other places they might put their money. And I also suspect the Chinese government and monetary authorities are not sitting by just waiting to see what happens. I suspect that brokerages are being asked to sort of take positive steps as well, which is what we saw when the Chinese market came under real pressure in mid-2015.
Now, so therefore I'm wondering, have you seen evidence of some flows from the large money managers that you spoke about, talking about or moving into Chinese markets at all?
Yes, we've seen positive flows, and as you know, China's average weighting for most gem funds, especially those that are indexed to the sort of more widely known indexes, has been going up. So, anytime a gem fund we track takes in $1 on average, 30 cents of that goes off to Chinese equities.
Okay.
So it is supported both by some, direct contributions to dedicated China equity funds, and will be supported if and when flows to the diversified funds bottom out and begin to turn positive again.
Yeah, but I was wondering, since they haven't turned positive, whether Chinese getting their individual monies. Just one more question, Cameron, and which is on how are you seeing the flows within the rest of the markets as well? In India, for example, there's a lot of talk about how some of the passive money or the program money is starting to move. It's not the bottom-up or India-dedicated funds which have taken large calls. Do you have any idea about what is the nature of the global money that is leaving Indian shores? Every day we're seeing about $500 million worth of outflows.
Right. Well, what I was seeing even before the coronavirus became the dominant story for markets was a definite souring, certainly over here, on the part of both investors and fund managers with the overall Indian story. Increasing concerns about the pretty lackluster private investment and a real sense that the Modi government had decided to utilize the mandate it got last year, not for further economic reforms, but to sort of pursue its social goals. and it was just coming into the new year. Certainly over here, I was starting to see a lot of reports expressing concern about the Indian banking system. So India, the dedicated India funds were already under pressure before all of this brewed up. And India, along with Turkey, seems to be one of the handful of emerging markets which investors really think might handle this particular crisis with less aplomb than some of the markets that I mentioned earlier in our call.
All right. Great insight there, Cameron. Thanks very much for joining us. Really appreciate you taking out the time.
Not at all. Take care. Stay safe.
You too. All right, that's Cameron Brandt there. And interestingly, that's what most people have also been talking about. Concerns around how India actually goes about handling this situation. We're still in stage 2, not moved into stage 3, according to the Ministry of Health. And if that happens, then this could be a little worse off. We're still about contained at stage 2. But let's talk a little bit more about the markets as well, because that deserves all the attention right now. Abhimanyu Sofat of IIFL joins us right now on the show. Abhimanyu, thanks very much for taking out the time. Let's talk about the conversations at office in terms of what's likely to happen and what kind of investments does one start looking at now, if at all this is the right time.
Well, thanks for having me. I think so. What clearly is happening is that, first of all, there's a kind of an emotional scare that people are having right now, especially in cities like Bombay and other metros, where what we are seeing is clearly that, people are looking at, what are the sectors which are getting impacted. So clearly, like, for example, in case of IPL, we are clearly seeing probably, potential ad revenue of around $300 million getting impacted. We are seeing that the aviation industry, getting significantly impacted. We've already seen reports of Go Air, laying off people. We are seeing hoarding happening in terms of, the retail side of things. We are seeing the theaters getting shut. So as of now, right now people are a bit worried about, what is the economic impact of this thing, because we don't know when it will end. Secondly, I think so what one needs to look at is what are the potential winners that we can get out of this crisis. So clearly, sectors where, people when they are at home and they are likely to use those services more, like the telecom sector, that looks quite attractive. Bharti Airtel is one clear winner that we see with whatever has happened in terms of, the AGR hearing is today. But irrespective of what happens in the hearing, structurally, I think so Bharti Airtel is a very strong company, considering what has happened to the telecom sector. With this coronavirus thing, I think so the minutes of usage are going to increase, or data usage will also increase drastically. So all those things would be pretty good for Bharti Airtel. FMCG is another space that we are liking at this particular point of time. If you look at the overall index, so we divide the index into 3 major baskets. One would be the commodity side of the market. One would be the financials, excluding, say, SBI. And one would be commodities, SBI, and other cyclicals. So the overall share of the low-risk IT FMCG would be around 38%. Financial SBI would be 32%, and commodity, including SBI, would be 30%. Now, what we expect is on a blended basis, the low-risk basket earnings should potentially go down by 10%, financials around 15%, and the higher-risk sector, impact of earnings could be around 25%. Overall, we see that there could be an earnings downgrade of close to 16% based on whatever we have seen till now and our ability to forecast numbers for this particular year.
Okay, got that. Abhimanyu, we'll love to talk to you about individual companies as well, but need to get a quick check on what are the brokerage calls this morning and how do the stocks stand to do as they set up for trade. There's some stocks in news as well that you need to be mindful of. Somit and Yash both are joining us right now. Yash, let's start with you.
So I'll start first with the stocks and news and a couple of clarifications coming in from the banks. Well, IndusInd Bank said that rumors with regards to its financial health are completely baseless and that the bank continues to remain profitable and is well capitalized. The bank also said that they expect their net NPAs, which is a measure of their asset quality, to drop below 1% in the quarter ended March 2020. However, there has been one negative that post the Yes Bank fiasco, some of the government entities, they have withdrawn their deposits, but that too accounts only for 2% of the bank's total depositor base. Next up is Yes Bank, where the CEO designate Prashant Kumar has said that the recent outflows after it was put under the moratorium by RBI on March 5th have been fewer than what was anticipated. In fact, only 1/3 of the total depositors have withdrawn the maximum amount, that is 50,000 rupees. And over the last 4 days, they have in fact seen an increase in inflows coming, which is a positive for the company. That apart, some of these diagnostics players will also be in focus, such as Metropolis Healthcare, Dr. Lal Patlab, as well as Thyrocare, after the government said that it would be roping in private labs in order to provide a virus test, but it would be free of cost. That apart, some key bulk deal coming in. Tata Consumer Products is one where Mitsubishi Financial Group has reduced their holding by 2 percentage points from 3.6% to 5.6%, from 5.6% to 3.6%. Tata Consumer Products is the demerged entity of Tata Chemicals, which basically sells their consumer products. HSIL and Apollo Tyres, these are the other two stocks where HDFC Mutual Fund has reduced its stake. So in HSIL, they've reduced it from 5.17% to 3.14%, and in Apollo Tyres, remember, the stock is at a multi-year low. In fact, it's breached below the 2-figure mark as well, and now the fund house has in fact increased its exposure in the tire maker from 5% to 7%.
All right, Yash, thanks very much for that. So, Amit, what are brokerages saying?
Well, a couple of them. The first one is on Hindustan Unilever, where Credit Suisse has upgraded its rating on the stock to an outperform from neutral rating and have hiked the target price to 2,400 from 2,200. Now, according to the brokerage, the GSK acquisition, which comes into effect from financial year 2021, is likely to be the key driver over the next 3 to 5 years, and is expecting media efficiency, staff cost reduction, distribution efficiencies, and lower overhead to drive margins by nearly 1,000 basis points. Along with this, the company is also seeing a margin tailwind as crude prices have dropped significantly, and crude prices form nearly 35% of the total input cost for the company. While there can be a disruption due to COVID-19, says the brokerage, HUL in the past has been the best amongst peers at managing disruptions. Lastly, it is highly uncertain. In a highly uncertain environment, HUL offers a strong earnings growth visibility, says the brokerage. The second one is India Life Insurance, where Morgan Stanley is saying that the earnings outlook is getting tougher given the continued volatile markets, lower rates, and likely negative impact from COVID-19. To factor this, the brokerage has reduced its VNB estimates for the three life insurance players by nearly 3 to 10% over FY21 to FY22. Now, the only positive that the brokerage sees from life insurers is that the full impact of coronavirus looks likely to be in the first quarter of financial year 2020, which is seasonally a weak quarter for the insurance companies. So the fourth quarter numbers won't be impacted. And the changes in the rating, firstly, SBI Life, they have downgraded the rating to equal weight from overweight and have cut the target price to 820 from 1100. For ICICI Prudential, they have maintained the equivalent rating but have cut the target price to 400 rupees from 490. And for HDFC Life, they have maintained the equal weight rating but have cut the target price to 500 from 570.
All right, guys, thanks very much for that. So those are stocks you need to keep an eye out on, and especially IndusInd Bank. That stock has been pummeled 60% from levels of 1600 almost, and the stock's down to about 600 levels. Abhimanyu, actually just come in on IndusInd Bank. The management, I think on 2 occasions, on one, a week, 10 days ago as well, put out some clarification. Now as well, they're talking about, the stability and the profitability of the bank. There's no concern. But still, the market seems to be a bit edgy.
So I think so. The genesis of the problem over the last couple of weeks has been, what has happened in the case of Yes Bank and with the case of, IndusInd Bank, with they proposing to cancel, the 81 issue. People have kind of in the debt market have started to believe that except for the top tier banks, there'll be challenging times going forward for private sector banks, whether it's for NBFC. And that is leading to this crisis of confidence in some of these companies, and we are seeing investors selling these stocks. I think so. What will be important in case of IndianOpen Bank would be, yes, the promoters have been talking about increasing stakes, but when we actually see money coming in, that could probably give more comfort to people. The other thing is that the ability to garner money from the debt market for a lot of these companies, since leveraging is a key part of their business, that would be something that one needs to watch out for. Globally, what we've seen is that a lot of the Indian financial institutions which have got some amount of money raised overseas, the yields have really spiked up over the last couple of days. So clearly, there is kind of a move where FIs are doing basket selling, and if anyone is from BFSI space, they seem to have a negative view on those companies. So probably the bigger ones still have a lot of domestic support, whereas that's like IndianOpen right now struggling to get support from the domestic investors.
Abhimanyu, just one follow-up since we're on the topic of financials. Some of the highest quality names have corrected as well. Do you reckon that, to your clients who will, whenever they come to put in money, would the first ports of call be the HDFC Banks, Kotak and the Bajaj Finances of the world? Or would you be tempted to look at some of the others which are probably trading at sub book or sub half book in the case of PSUs, for example?
So, first of all, our base case is that, the market may go down further from current levels. And in that kind of a scenario, what one could be looking at buying would be more of pharmaceutical stocks like Sun Pharma, Dabur, HUL. If you're doing the mid caps, then probably stocks like Naveen Fluorine, Ipca Labs, which has a very strong position in the pharmaceutical market. However, if we find that the market stabilizes, especially the U.S. market, and this selling that we have seen, the foreign funds have sold in emerging markets close to $70 billion from 21st of January. If we see that selling a bit, then obviously the first stocks that should do pretty well would be the Bajaj Finance, HDFC Bank, which you have already said. Plus, I would add an ICICI Bank, Gujarat Gas. So those are the kind of stocks that we would recommend investors to pile on once there is more stability in the market.
Okay. We'll get to our technical guest as well. Gaurav Bissa of LKP Securities is joining us, as well as Chandan Taparia. But I'm just looking at the stock price of Z right now. It's at 133, and while looking at this stock, you just wonder how lucky the promoters were that they were able to pull through and get through their stake sale, manage to pay off what they had to pay off to creditors. Because if that would have extended, if they would have taken a further extension and it would have come in the midst of the coronavirus pandemic, it would have been a very difficult proposition for them to go ahead and sell any kind of stake. The stocks were down 20% in yesterday's session, 133. And most likely, if this route continues, this could also become a double-digit stock. But we'll get to Abhimanyu and I'll ask him about Z in a bit, but I also want to talk about the index and the strategies at play there. Chandan, I'll start off with you first. What's the call on the index? Yesterday we closed below 9,000.
Yes, good morning. Nifty continues negativity. It opened positive but fell to walls beyond 9,400 zone and even drifted below 9,000 by closing near to 8,900 zone. We have seen that bounce are being sold in the market and volatility index is trading at 11 years high levels. We have seen volatility index touching near to 68 zone. It closed at multiple years high levels. So higher volatility could continue to keep the bear grip with roller coaster ride in the Indian market. As of now, the structure and the trend of the index is positive, whether you talk about the Nifty and Bank Nifty, in line with the volatility to the global market. So as of now, the market has to surpass the immediate hurdle, then only short-term stability could be there in the Indian market. So the index which closed below 9,000 zone has to surpass 9,400 marks, then only some short-term stability could be there. Otherwise, market has potential to revisit the recent low of 8550, 8500 zone. So here I'll only take the brave call if Nifty manages to hold beyond 9400 to 9500 zone with cool down in the volatility, then only we can assume and predict about the short-term stability in the Indian markets.
Okay. Gaurav, Bissa, what's your take on the Nifty and the structure of the Nifty bank in particular, which is extremely fragile? Much of the pain is getting exaggerated because of the Nifty bank.
Good morning. When market corrects, when market melts, we always look for the culprits. But the point is, it's not just the bank Nifty as well. We are seeing the large caps are also not performing that well. We talk about Reliance, we talk about SDFC. As Chandan was also pointing out, that we are seeing some amount of bounce back sort of coming in, but sustainability is an issue. And when your index or indices rather something like Nifty, which is a mature index, is giving a 400-500 point move daily. I'm talking about the overall part. It becomes very difficult to trade, and one will have to play very carefully. If you look at the hourly charts or the 2 hourly charts, we'll see that it's forming falling wedge pattern. It's staying support at those levels of 8850, 8900. If that sustains, we can see a temporary bounce back towards 9150, 9200. If that is taken out, then we can look at fresh up move sort of. But again, the point is, like, we are opening likely to open with a small gap up node, or we open with a gap down node. So whenever the index opens in this scenario, it opens with a gap up or gap down node, it becomes even more difficult to trade, because it then it does not follow a trend. We see a gap down happening and then some recovery happening, and then we see a follow through selling. Similar case with gap up node, we see a gap up but don't see a follow up buying, and then we see some plunging coming in the Nifty index. So it becomes very difficult to trade. One will have to be very straight. Do not have overnight positions. Play strictly on the intraday basis. And for intraday, as I mentioned, 8850 is a crucial level. If that holds, we can see a move towards 9200. At that level, one should review. If it does not sustain, it can again become a good sell position, like what we have seen in last few days.
No, sorry. So are you saying you will buy HDFC, or are you saying you will sell HDFC below a particular level, Gaurav?
No, I was talking about the Nifty. I'm just saying, I'm giving examples like HDFC Bank, Reliance. Even they are not performing. They are not part of Nifty Bank Index as a whole. But even these names, whether it is ITC or some other names, barring one or two names, we are not seeing significant pullback coming in the large cap names. If that does not happen, we cannot just wait for Nifty Bank to give a boost to the Nifty Index, because then we are currently looking at names like HDFC, which has again given a breakdown. So all of these names, whether it is HDFC, whether it is Reliance, or HDFC Bank, they have given a breakdown. Pullback in these names are likely to be used for creating fresh shorts. So I would wait and watch for the index as a whole. I would rather play on an intraday basis, for the reason that overnight carrying is also becoming very difficult, and it's becoming very difficult to actually play in this kind of volatility. So for now, for Nifty spot levels, support is seen at 8,800 to 8,850. On the other hand, the resistance are seen near level of 9,200.
Chandan, are you trading any specific stocks? Chandan Taparia?
Yeah, talking about the stocks, we have noticed that a couple of FMCG stocks are bottoming out. So here I want to mention about the Hindustan Unilever. This stock has exactly taken support at the previous resistance zone. So it's a classical example of the role reversal, where the previous hurdles are acting as a support and stock is turning by surpassing the immediate moving average. Comparatively, we have seen buying interest in FMCG counter. So Hindustan Unilever could be a bet where one can look at. So Hindustan Unilever, we are suggesting to buy on a small decline with a stop loss of 1940 and expecting it to move towards 2080 level. Second, that is also from the FMCG pick, and that is the Pidilite. Overall, the structure of the counter is quite bullish. However, because of the market pressure, it fell down. But we believe that if market recovers, this stock can do well. And if someone is also looking to take the stock in the portfolio, then also these HUL and the Pidilite are good bets. So one can look at buying at Pidilite for an upside target towards 1640. So for the long side, trading with portfolio accumulation, we are talking about Hindustan Unilever and Pidilite. While for the shorting ideas, we believe that most of the metal counter could be in pressure, and JSW still is a counter which is not recovering even after the market recovery. So here we are expecting the negative sentiment. One can sell with a stop loss of 183, and the stock has potential to go down towards 160. In the way it has seen the built-up of short position, the stock can easily go down by 5 to 8%.
A minute left to go for market pre-open. We're just going to watch out for some of those names that had a big collapse, and the quality names at that, as they open up for trade. And IndianOpen Bank, whether or not the clarification put out of the management has had any form of an impact on overall market sentiment. Last 1 month, the stock has been down about 50%, 74.24 for the currency as well. So yesterday's session fairly muted. Saw some strength in early morning trade, but then once again towards the close of trade closed above the 74.24 mark to the dollar. The bond deals, that's going to be another factor to keep out in under watch. Few names, the likes of HDFC Bank, Bajaj Finance also, Reliance Industries, which supported the index yesterday, whether it comes back to do the same in today's session, watch for that as well. Pre-open ticks on your screen, Nifty 50 up about 1.5%. Sensex, that's also higher in trade this morning. But again, wait it out for a few moments. You'll see a consolidation of these prices. Yes Bank is opened positive. The big 58% pop continues today as well, and the stocks come back to levels of 64. Coal India, that's up 10%. Power Grid is up 10%. NTPC is up 6.5%. Eicher Motors up 5%. Bajaj Finance moves up 4% on that one. Maruti Suzuki, remember yesterday the stock was one of the few stocks, in fact the auto pack, Eicher Motors, Hero MotoCorp, Maruti, were some of the few stocks that did really well. HUL 2.7% higher. TCS, Titan is up. You've got Ultratech, SBI is up 1.87%. Infosys moves up. Dr. Reddy's, Britannia, L&T, Tata Steel, everything is up. Few losers, HDFC Limited and HDFC Bank continue to look weak. Both those stocks in the red. Marginal cuts though, but still in the red. Nestle is down, Eicher Motors is down, HCL Tech is down. For the currency, some strength again this morning. At the start of trade, we're just around 74 to the dollar. 1/3% gains coming in.
Yeah, yesterday too, while we strengthened a bit, we came off at about 74.23 or 24, currently at 74 odd levels. Let's see what happens during the course of the day. Bring up certain names. So while IndianOpen Bank is one stock that we spoke about, I think RBL Bank, Piramal Enterprises are the two other names that you need to monitor. Typically, they started moving in tandem, these stocks. Let's wait and watch if the cases are different today post the IndianOpen Bank disclosures. Bring up Phoenix Mills, PVR, Inox Leisure. These are the other names which now people are talking about the bans likely to be maybe extended beyond as well, if indeed the cases spike up in India. And do watch out for these names. They're fragile is all I'm saying. And Delta Corp too should come up on your screen. Has corrected quite a bit, but the business is shut till the end of this March, at least in Goa. And some bit of bounce today. Let's see if this gets sold into. Last but not the least, just want to mark a clutch of securities which have seen some brokerage initiations. So HDFC Asset Management Company should come up on your screen. Morgan Stanley is downgraded and cut the target price quite sharply. For now, it's not showing that impact. And they've also cut the target price on the insurance companies, not by much. HDFC Life target price has been kept at 500. The stock is below that already. But the stock corrects a little bit in the session. Before we get to Abhimanyu Sofat back, and we want to talk to him about Z, talk to him about how the trade is happening currently in their dealing rooms as well. Gaurav, Bissa, your stock recommendations for the morning.
The first recommendation would be buy on Bajaj Finance. It has seen a strong correction. However, if you look at the weekly charts, you will see this is one of the very few decent quality names where on the Ichimoku setup it is yet to give a close below the weekly cloud as well as a monthly cloud. Yeah, the bounce back that we have seen when markets saw a low circuit, it has not bounced exactly from the monthly cloud area. So it gives you a degree of confidence that there can be some more bounce back that can be expected. With the stop of 3,300, one can buy for 3,600, 3,650 kind of levels in the next 2 or 3 days. BloombergQuint is the other name. We have seen a strong correction coming in. The trend has been quite strong. It's now taking supports at the area of 425, 430. It's already moved up a bit, so I would wait for a dip towards 440. At that level, one can buy, keep a 10 rupee stop loss on the upside. 455, 460 is what I would be looking at.
Okay, Asian Paints. Remember, Asian Paints is one stock which has really held, good ground. Titan is at 1,032. Remember, there is a possibility of business getting impacted, jewelry business particularly, with spending being curtailed, and whether or not these big ticket purchases will be undertaken by most households. A quick word, Abhimanyu, on the business of Titan. Do you feel that this could be some more damage for the company? They've already reduced their guidance, but last quarter they met the lower guidance. But do you feel there's a possibility that there could be a slip up for business in the jewelry segment for some quarters?
Yeah, so for sure, I think so. The way things are today, when people are not moving out of their house, how do you expect them to buy jewelry? I don't think so. In India, people right now in metros are still accustomed to buy jewelry online. Everyone has to go to a store and then only buy these things. So I think so definitely there's going to be an impact, and we would expect that going forward there could be a decline in terms of growth rate. What has been projected, somewhere close to around 18% for this entire year. So there could be a significant reduction in the growth number for this particular quarter, and possibly the impact could be there even for the June quarter as well in case of tech.
Okay. Purely from a technical standpoint, Gaurav, Bissa, what would you do with this one?
You're talking about Titan?
Yeah.
See, it's given a strong breakdown. This was one of the a few names that has been holding up so well. But once it gave away the gains and we saw it giving a strong breakdown below of 1200, since then it has been trying to go up, but the sustainability has been an issue. I would not be too gung-ho about the name. I would probably wait for some more time. There is a support at area of 950, 960. I think that is the area that one can buy just to have a better risk reward. If you buy 1,000, you keep a stop loss of 50. That can be a trade, but then the risk reward would be not that suitable because there's a good resistance at area of 1,050, 1,080 as well. So any dip towards 950, 960 can be bought, keep a 30, 40 point stop loss and play for 1,050, 1,100 kind of targets.
Okay. Abhimanyu, we wanted to talk to you about Z. How dire do you think the situation is here? The prices are showing certainly some nervousness.
So I think so, after the Yes Bank case, whoever, directly or indirectly has been involved, with or has done some kind of transaction with the Yes Bank, all those groups are getting impacted. In case of Z, I understand that though Z did not have any direct exposure to Yes Bank, but for some of SL Group's infrastructure projects, they have had an exposure with the Yes Bank. And since the Enforcement Directorate has called Mr. Chandan as per reports today, so most of the companies where those promoters have been called, we are seeing that the market in the current state of scenario where there's so much of uncertainty, everyone seems to be dumping those stocks, and that is the reason we are seeing this kind of a reaction in case of Z.
Okay. That's at 135 now, up 1.43%. A few other names, and I want to look at SBI and SBI cards both in pre-open. SBI is up about 2.72% at 221. SBI cards has been holding all right since its listing. Though the day it listed, it was down 10% at closing. But yesterday was up 8%. Today the open is up about 3%. So it's at its issue price. Abhimanyu, for somebody who didn't get an allotment, is this the time to look at buying SBI cards?
So I think so. It was a good issue where, being the first company from getting listed. Obviously, overall expectations of investors in terms of, how much upside they see when they are buying a stock, that expectation has increased now considering that the overall market has come down. This particular company has been growing at more than 30%, and in terms of ROE is also closer to around 26%. So I do feel that at this particular price point, long-term investors definitely can look at buying this particular stock. It is likely that from current levels, the stock can go up by at least 25% from these levels over the next 1 year. So the answer to that is yes, obviously, if someone has not got an allocation, they can look at buying this stock at this particular point.
That's not a bad deal. Last 2 days, in fact, you've probably got opportunities to buy them sub 700 as well. The pre-opened low was 661 for this stock. Not SBI cards, but another stock that took fancy was IRCTC. I want to see what that one's doing right now. And almost on a daily basis, the stock skyrocketed. And the fall has been equally pacey. Now at 1,076 from levels of near 2,000, it's halved from there. Chandan, Taparia and IRCTC stay away, or maybe there is a remote chance of a trade possible?
The stock did well in last couple of months after its listing. It headed all the way to 2000 sub kind of level. But in last 4 weeks, the stock is continuously falling down and now holding near to 1100, 1180. And what I feel that somehow the stock will find stability near to 1950 zone. So those who are looking for the long-term investment or those who are looking for the positional trading can look at the support near 950 to 1000. And if stock manages to hold here, then definitely it can again head towards 1400 kind of level. So I think in the recent downfall, when stock is corrected by more than 50% from tops, one can definitely look to accumulate this good quality counter for the long-term investment, for the good return and opportunity at current zone.
Okay. I just want to actually go back to the 3-month chart of IRCTC. It just looks like a peak. As fast as it went up, an equally fast drop, as you can see, made that top and then it just slid down in the last few days of trade. But we're just minutes away from market opening, and we tell you all that you need to know to stay ahead in trade today. Yes Bank Administrator Prashant Kumar says deposit outflows have been less than what was permitted. He claims inflows were higher than outflows in the last 4 days.
The stock is locked on a 10% upward circuit yet again. Credit Suisse upgrades Hindustan Unilever to outperform from neutral, hikes target price to 2400 from 2200, citing cost efficiency post GSK acquisition.
Blackstone increases its stake in Emphasis by 1.6% through its subsidiary Marble 2. The promoter's stake now stands at 53.8%.
Syndicate Bank Board approves the share swap ratio for its amalgamation with Canara Bank.
Government urges private labs to provide virus tests at no cost, putting the spotlight on Metropolis Healthcare, Dr. Lal Path Labs and Thyrocare Technologies.
And Mitsubishi UFJ Financial Group reduces its stake in Tata Consumer Products to 5.6% from 3.59%. So that's the other one that you don't want to monitor. Abhimanyu, before we thank you, I heard you mention at the start that the markets seem to be headed lower. Are there pockets where you believe the price damage is already factoring in the business disruption? I mean, for example, we may not see too much of a disruption in life insurance business as much. We may not see too much of a disruption in telecom. Are these pockets that people should look at? I think we've lost Abhimanyu. Do we have Abhimanyu as yet? Abhimanyu, can you hear me?
Yeah, I can hear you.
Yeah, so I was asking you about these pockets. Did you get, I mean, Airtel or other telecom as well as insurance? Would you buy any of those stocks because the damage may not be as severe?
So absolutely, we continue to like stocks like SBI Life. I think so. Number of deaths are going to be pretty minimal to have a big catastrophic impact on a life insurance company. From that perspective, SBI Life looks a good buy to us. We had already discussed about Bharti Airtel. It is among our top picks, and we feel that telecom is one good sector, and especially stocks like Bharti Airtel should do pretty well. Another sector where we recently have turned positive after being negative is pharmaceutical, because we clearly believe because of coronavirus, how the strictness of US FDA is going to reduce drastically over the next 6-7 months. And going forward, I think so that is one sector which should do pretty well. Valuations are not at all expensive in that particular sector. So Sun Pharma looks quite good to us from the pharma pack as well.
Okay, we'll leave it at that. Abhimanyu Sofat, thank you so much for taking the time out and speaking to us today.
Thank you.
That's the view from Abhimanyu Sofat of IIFL. By the way, just keep in mind, a minute and a half left. There are a clutch of nifty changes that are going to happen effective today's closing. Shree Cement would be in for Yes Bank. Bandhan Bank would be in for Yes Bank in the Nifty Bank. And therefore, there are a clutch of estimates that various brokerages have about the flows. Shree Cement looks like the one which could have a big difference. Though it's a very large market cap, Devina, but $84 million inflow. Nothing dramatic, but could be interesting.
Yeah, Shree Cement, tomorrow morning you'll have this in the indices trading instead of Yes Bank. Those are the expected flow numbers. Shree Cement with an inflow of 84 million, and Bandhan Bank gets an inflow of 14 million. And there is obviously the balancing, the entire fund, the entire index balancing. We'll see a few other names seeing changes as well. And Yes Bank moves out with an outflow of 36 million. 30 seconds left to go for markets to open. A 10-second view, Chandan, Taparia, on any stock.
As I mentioned that I'll focus on a couple of FMCG counter. So I can look at Hindustan Unilever as I mentioned, or look at the Pidilite. So here I'm expecting a move towards 2080 levels.
All right, Gaurav, 10 seconds.
For me, Bajaj Finance, that can be on the radar. It's trading near crucial levels, and if these levels are sustained, we can see a decent bounce coming in next few days. So for me, it will be Bajaj Finance, immediate target of 3600.
Gentlemen, stay on. We'll just take in opening thoughts from you and then let you go, because we are starting off well for the indices. But this is in stark contrast to what the SGX Nifty was indicating, mind you, 1.5%, 1.75%. So that's a really sharp uptick. We are actually looking at the markets yesterday and maybe not the Dow futures today. I don't know if they have moved up. We'll try and mark them too. But the Sensex about 521 points and the Nifty Bank about 330 points. So it's a good start. Let's just hope. Let's just wait and see if this gets held on to or does it get sold into. Yesterday was well, not a similar start, but a start which was in the green, which got sold into very, very quickly. The mid cap and the small cap indices should come up on your screen. About 1.5% higher for the mid cap index. The small caps about 0.78%. So start is not bad, you would have to admit. Let's get the heat map up on the screen and see if there is any kind of major red. Well, except for Kotak and Axis Bank, and which again brings the bank Nifty in focus, we don't see too much of red. HDFC Bank 2 is lying absolutely muted. Somehow there's something amiss with the private sector banks, there's at least the quality ones. Nobody seems to be wanting to touch them. What people are latching onto is Yes, another 15% higher for Yes Bank. Well, talk about moves that a stock can make. This one is really, any bull's dream, really. Z up 6%, so a bit of a bounce. IndusInd Bank moves up about 4%, and there's some bit of bounce back in some of the IT names like Infosys and Wipro, for example. Wipro 2 is up about 3%. ICL Tech is up about 2.5%. So Nifty IT seems to be contributing. And yesterday's big mover, HUL, is up another 2% in trade. Reliance is up about 2% in trade. So there's some gains that are happening in some of the old economy stocks as well. Save for some private sector banks, the mood isn't that bad. We're holding on in the first couple of minutes for the benchmark indices. Just one pocket that I want to highlight, and that's telecom. Keep that at the back of your mind. There's a hearing today wherein the DOT is making an application to see if that the moratorium or the staggered payment can be allowed for some of these. So Bharti, Vodafone Idea, as well as Bharti Infratel as a related entity would certainly be in focus. So do watch out for these three names. Devina, what are you spotting?
Well, I heard you say any bull's dream for Yes Bank, but any bull's dream who can't cash out at this point. They're just stuck in it for 3 years. So yeah, I mean, if it stays like this, then yeah, after 3 years, it'll be their dream. But other than that, in the broader market space, Dr. Lal Path Labs is up about 8.5%, and some of the other diagnostic stocks come up as well. So Metropolis being one, Thyrocare being the other one. Remember, we told you how the government is made a plea to some of these private diagnostics to come in and provide COVID-19 tests for free. But obviously we'll wait and watch as to how that unravels. But for now, all of these pockets looking very active. Deepak Nitrite is up about 3.8%. SBI Cards is now past its issue price, so 750, just about there. But like Abhimanyu said, that if you hadn't got an allotment, it's definitely not a bad time to look at SBI Cards. It was an issue that came around with great fanfare, and even at those valuations, subscription levels were pretty strong. Other than that, the likes of an SRF for 1.7% higher. DV's Lab, that's up. You've got InfoEdge that's moved up as well. So some of these names to be monitored. Naveen Fluorine doing okay. The likes of NIT Tech, Tata Elxsi from the smaller IT names, Ajanta Pharma, Lupin 2.5% higher. Aurobindo Pharma, Bata India, Glenmark Pharma, United Breweries, that's up about 1%. Soba, and then a few other names like Avanti Feeds doing well in the session. What's not doing well? Future Retail, and that stock's down 10%. Remember yesterday we spoke about how the monies that they had raised in the month of January via US dollar bonds, the yields on those bonds that they raised $500 million via shot up significantly to 11.3%, and these monies were raised at a coupon rate of 5.6%. This really points towards the uncertainty around whether or not there's something that's happening within the Future Group. That's obviously, some amount of street talk that we've been hearing as well. But Indiabulls Ventures is down 5%. Indiabulls Real Estate is the other one that's down. Divan Housing is down 5%. Future Consumers down 5%, and a few usual suspects there. Equitas is actually down in the session, and City Union Bank, Marico, Interglobe Aviation, your travel and tourism related stocks taking it to the chin today.
Well, the Nifty Bank has given up the gains, just about 0.5%. Before we get in, Pramod Gubbi, quick thoughts from our experts who are still with us. Gaurav, Bissa, a quick thought on the Nifty Bank, which has just lost all its sheen in the morning.
See, as we discussed that getting an upside is not an issue. Sustaining it has been an issue so far. So for me, it is still an avoid till we don't see some amount of stability. I would not be too positive about it. It can head towards the 21,500, which has an immediate support area. And if somebody wants to have sustainability, I think it needs to hold above levels of 22,700. Only then we can see some amount of stability. So at these levels, I would be a little bit careful. I would not be too positive about the index. But these are not only shorting areas as well as for the reason that this sword is not that favorable. But any jump towards the level of 200, 300 points, one can try to initiate short position. But the current juncture, I would not be too keen in creating fresh shorts.
The Nifty Bank, by the way, keep that at the back of your mind. This one is really succumbing to some selling, and Yes Bank is not, up about 20%. Purely on the charts, Chandan, Taparia, just before we thank you, what do the charts of Yes Bank suggest?
See, frankly speaking, I think the entire market is looking safety in Yes Bank and Idea, and the way stocks are moving up. But what I suggest better to avoid, I see because of this 25% lock-in of 3 years, and then 75% lock-in in 3 years, and some short covering in FNO, and the stock is now coming out from FNOs. All are the reason which is keeping the stock on higher side. We have noticed that the stock has done the short covering of more than 25 to 30% in last trading session, and that is the only reason. So I think those who are holding, better to ride really, otherwise try to reduce the positions. We don't have view in the counter. The stock has fallen to 5.65 and again back to 73. If someone is holding, better to put trailing a stop loss of 62, and if it moves up, it can head towards 85 or 88 kind of so.
Okay, I'm assuming those are calls on the FNO segment, because cash, at least, you can't square off much of your position. Thanks very much, gentlemen, for joining us this morning. Chandan, Taparia, as well as Gaurav, Bissa, appreciate you both being with us. Pramod Gubbi of Marcellus Investment Managers is joining us right now on the show. Pramod, thanks very much for taking out the time. And I see you're home quarantine too, working from home. But, you know, these are tough times. And from a market standpoint, it's very difficult to take a call on the back of a few short-term rallies that you get, whether or not time to invest has come. When the uncertainty that lies ahead is so vast, because this is nothing compared to a financial crisis where the problem was specific, the resolution to that problem was also a few specific steps that were taken, and the matter was resolved. This is a matter of a different proportion altogether, and therefore to make a gauge on how to invest is a very tricky proposition at this point.
Well, it never is. It never is an easy proposition, especially in terms of timing the market. You know, forget about these times. Even in normal times, we wouldn't recommend timing the market. That's perhaps the hardest part of our job, and almost next to being impossible. What we can do while investing is, you know, try to focus on fundamentals. Ultimately, the stocks that you invest in, you would like to invest in at a price which is significantly below what is your best assessment of its long-term fundamental value. And the fundamental value doesn't lie in the earnings of a business for a quarter or two. It's literally as defined. It's the present value of the cash flows to perpetuity. So to that extent, I think we will all do ourselves a favor by focusing more on the long-term fundamentals and trying to assess the events that are happening around us. Will they have any bearing on those long-term fundamentals? In most cases, I think unless and until this whole thing spreads into something that's totally unprecedented, something that none of us can actually fathom, in most cases, I think the long-term fundamental value will remain intact by and large. There will be short-term earnings downgrade. There will be recession pretty much across the globe. But will that affect the long-term fundamental value of the company? As long as the company has a strong balance sheet to weather the storm, has a strong competitive advantage to look through the short-term weakness, I think that's pretty much the only thing that an investor can focus on. And if the stock markets are giving you a price point which is significantly below that fundamental value, I don't think there is any great merit in trying to time your entry. You should start buying. Now, what the question is, would you deploy everything that's at your behest in one go, or should you start nibbling? I think that's a matter of choice, and I think there are merits to both. But we are in the camp that if we find value there, we would pretty much like to put our money to work immediately. So I don't think there's any great merit in trying to time the bottom. The market will remain quite volatile. News flow such as last night where the Fed started to buy corporate bonds, who knows, eventually they might even buy equities. Could mean that the bottom could be much before what the overall situation could abate. So focus on fundamentals, focus on long term. I think there's a great opportunity for all of us.
So Pramod, now the thing is that now the government is going to increase testing in a big way. From current 500 tests that are done per day, they're looking to spike the tests up to 8,000 tests per day. And that will reveal the real numbers and the real affected rate. If those numbers turn out to be adverse, does that scare the market, or does that spook the market to such an extent that we start to crumble much more than what the rest of the world does?
Well, I'm not sure even those numbers will be meaningful in the grand scheme of things. I'm not an expert. I don't think many of us are experts in this field where even the best of scientists are trying to figure out what the strain is all about and hence secure in a vaccine. So based on whatever little knowledge we have, it seems like especially we have the East Asian countries to look up to in terms of an example or a precedence. China and Korea particularly have shown, how they can come out of this situation by a very strong imposition of self-isolation and self-quarantining or social distancing, if you may. And to that extent, I think we are seeing not just in India, but also in the Western economy, we perhaps took it a bit too lightly initially. But now with the changes coming in, whether it's a month or two, maybe 3 months, we could expect the rest of the world also to go the East Asia way, unless and until the whole system sort of collapses. So irrespective of the number of tests done, my sense is the number of infections out there are significantly higher. And as we've seen from the experience elsewhere as well, a bulk of the population, particularly under the age of 50, who are fit enough, healthy enough, will be able to pass through that infection even without having to get tested and get reported. So those cases may never get reported, but actually we are going through that phase. All we have to do is we ensure that we don't pass it on to people who are not able to withstand that infection, right. People who are elderly, people who are not healthy enough. So I think there's no need to panic. The numbers are what they are. Good thing is if we are increasing the testing capacity, we will be able to quarantine more such people and prevent this further. But the only option at our hand is to really implement social distancing, self-isolation and self-quarantining.
Sure. Pramod, good morning. Saurabh was here the other day, about a week back, and he mentioned that it's almost difficult to predict what the economic impact would be. So you try and predict what the businesses would do over the next 3, 4, 5 years long term. My question is, when you look at the high quality financials in your portfolio, for example, how do you assess whether the price damage into those is baking in the disruptions, a large portion of the disruptions or all the disruptions that may happen in the business over the course of the next 1 quarter, 2 quarter, or maybe 3? How are you assessing that for let's say the financial names?
Like I said, if the value of a business lies in the cash flows to perpetuity, 1, 2, even 4 quarters doesn't have a significant impact. Of course, the present value of these quarters is highest, but once we pass through this phase, it'll be in the past and hence unlikely to affect the fundamental value of this company. Yes, of course, in sectors like financials, The short term can have a longer term impact through the balance sheet. If you have a very weak liability franchise where disruptions like these, access to funding becomes a challenge, then your viability comes into question.
Right.
And if
No,
the viability
Pramod.
is in question, then fundamental value.
Pramod, sorry if I can just come in. Sorry. Because I want this. I want to understand this in a targeted fashion. The high quality franchises have seen a dip. Now, my question is, just argument's sake, I'm not asking you to comment on a stock, but let's say Bajaj Finance has corrected from wherever levels that it was at, but I'm talking about the price to book. The price to adjusted book as we see it must be around 5.2, 5.5 or thereabouts. Correct me if I'm wrong. Now, how are you taking a call that this might be a good price to book to enter into or avoid this company for the time being?
Well, like I said, none of us know what's going to happen in the next 2-3 quarters. What we can do is assess the strength of the Bajaj Finance franchise, for example, or an HDFC Bank franchise. Do they have the balance sheet to weather through what is going to be a difficult 2, 3, 4 quarter period, both in terms of the asset side? Obviously, given the complete halt to economic activity, there will be asset side issues in the form of NPAs coming up. So you need a strong enough balance sheet, a tier 1 capital to sustain through that period. And on top of it, the bigger thing for financials, and particularly those dependent on the wholesale borrowing market, are access to funding. Your reputation in the market, where wholesale lenders will continue to provide lines of credit to you, will remain key for any financier. And we have seen in the past, from the global financial crisis, from the subprime mortgage crisis, your liability side problems can have a bigger viability impact on you more than the asset side. If you're not able to continue to borrow money from the wholesale markets, then your existential questions come into play. So what we try and assess is, based on the financial companies that we've invested in, do their balance sheets, to their reputations in the wholesale market, to their lines of credit, are they strong enough to weather this storm? And in our case, we're quite comfortable with the financials companies that we own. And from that perspective, this reduction in price to book actually provides a great opportunity, because remember, I'll reiterate the point, it's unlikely that the fundamental value, the long-term fundamental value of these franchises have been hurt by what we've seen so far.
So, Pramod and Marcellus right now, obviously now as time passes, you keep getting more and more stocks on your watch list that you would want to go ahead and research further to take a call on whether or not it's worth an investment or no. You've enlisted, you and Saurabh, every time you guys have come on the platform, you've enlisted a few names that we know about. You liked Relaxo, you liked HDFC Bank, you liked DD's Lab. Is there anything that's come on the watch list now?
Yes, of course. From our case, the primary factor has to be the strength of the franchise. And we're less fussed about valuation, as we've talked about so many times in your channel as well. So to the extent that the strength of the franchise hasn't really changed in the events of the last 3 months, that factor is not a factor where we will actually look at a stock now. Yes, perhaps the same franchises are now trading at mouth-watering valuations. That might make us get a bit more aggressive in terms of deploying money. In fact, we have seen a pretty strong response from our client base as well, who have actually gone ahead and topped up their accounts and deployed more money to make use of the opportunity given by the market. So yes, the same franchises trading at significantly lower valuations is what is making us more aggressive than actually anything that was on the anvil, but we were a bit concerned about valuations, but now they seem attractive. We would rather deploy money in the same set of companies that we've always liked.
All right, got that. Pramod, aside from that, while we've been talking about individual stocks as well, have you been able to have conversations with any foreign investors and their outlook on investments in India?
Well, not much in our current avatar. Of course, a few conversations here and there, but But I don't think anybody is looking at any specific opportunity now. The scare is at the market level. For most foreign investors, I think first is to handle the home market situation, which is what we are seeing from a flows perspective. Irrespective of which market you are, the whole EM as a basket has seen significant outflows over the last 2-3 weeks, and I would expect that to continue until there is some sense of abatement in terms of risk. So for now, I don't think anybody is making any calls. But yeah, they've always had at the back of this mind, particularly say a month ago when China was pretty much at the center of this crisis and India not really had any sort of an incident here. People were looking at India in much more favorable light because from a supply side perspective, India becomes a favorable alternative to China, which is the factory to the world, and hence the Western buyers who were extremely reliant on China would have to look at an alternative, and India was stacking up really well. And also the fact that we don't have too much exposure in terms of exports, we're not a significant part of the global supply chain. That also makes it a safe haven in a world which can get disrupted by events like this. Besides that, I think at this stage, from a risk aversion perspective, India is as risky as everything else.
Yeah, it certainly seems like that. But Pramod, appreciate you joining us and giving us some slice of how the thought process is right now when it comes to investing. Really helps people. Thanks so much for speaking to us today.
Thank you.
That's the view from Pramod Gubbi of Marcellus Investment Managers. But the markets have given up those gains, you would have to say. And banks principal culprit yet again. Axis Bank top of the pile, ICICI Bank following suit. So some of those banks are really giving up their market caps and share prices, and the pain is there. On the other hand, Yes Bank sitting atop the list of gainers, 45% for this one on 72 million shares traded. Now, I would presume that some of this buying might be intraday buying. The nature of the buying is difficult. This has to be long only in that sense, because even if you buy, I'm presuming you can't sell shares for a 3-year moratorium. So this is very, very interesting as to what's happening to Yes Bank the last few days. 83.67 right now for Yes Bank.
It makes you think with someone who got in at 6 rupees just to make a quick buck probably. This is a bonanza, obviously.
Yeah, even if you sell 25% of that holding, you made multiple times your investment.
Yeah, you have. All right, markets holding absolutely flat. And with that, we're going to leave you. From Neeraj, myself, and the entire team that's put Indian Open together. Thanks so much for watching.
According to a recent report, women today contribute nearly